Yo, what's up, everybody? It's your boy Orlando, aka King Smitty. Welcome back to my trading journey. For those of you who don't know, I started my trading journey a few years ago. Just trying to show everybody that you don't have to be rich or to be a genius to make money here in the stock market. With consistency, you can change your future, change your life. And before we get started, I want you all to go ahead and like and subscribe. We're on our way to making 100 subscribers, so go ahead and hit that button down there somewhere. To like and subscribe for me. I really appreciate that. But today I'm going to talk about three big tech stocks. Not even so much big tech, but three large companies that I do want to load up on in these times of uncertainty. Some believe that it is a new bull market now. At least with Bitcoin, it is. And then some people believe that a recession is on the way. Either way, I am going to position myself so once it is all said and done, I am in a good position to make a lot of money, right? So with that being said, let's take a look at my portfolio against the S&P 500 year to date. And year to date, you can see my portfolio is up 46.9%. So let's just go ahead and round that up to 47%. And S&P 500 is up only 8.6%. And I'm rounding that up to the nearest decimal. So as of the moment, you can see I am crushing the S&P 500, which is my goal overall every year. If I didn't want to beat the S&P 500, then I would have just bought the SPY or like VTI, VTOO, one of those indexes that just keeps me next to it, keeps me aligned with the stock market. But I'm not trying to be aligned with the S&P 500. I'm trying to beat the S&P 500. I'm very aggressive with my portfolio, and I feel like that's the way that I can make the most money, is being ultra aggressive. And so the three stocks I want to talk about, the first stock, let me pull this up as well, is Tesla. Ticker symbol TSLA. If you look at this stock here, this is on the year to date. First, I'm going to go over the RSI, which is down here. You see that it is roughly in the 40s. It's roughly 40 exactly. So it's not overbought, which means it'll be above 70. And it's not oversold, which means it will be below 30. It's kind of like neutral in a sense right now. You can see the MACD, it did cross over. So it is on a steady decline. And at this time, Tesla is in my first buying range in a sense, right? If you look at this chart, you can see the yellow is the resistance line, and this blue line, this horizontal type line, is the support line. And I want you to look over here, roughly where it says Thursday, 26 January 2023. You see this gap? I was explaining to one of my homeboys that gaps are going to fill. It's not a guarantee, but it's likely that all gaps fill. And this jumped from roughly 140 to 159. Let's just say 160 roughly. And it's been running, and since it's been running, I've been holding cash solely for the point for when this stock drops back down to fill that gap. And what did it do on April 26th? It kind of filled a little bit of the gap. There's still more to be filled. But you can see this long trend line right here, starting from, I'd say, January 2023 all the way to April 2023. It broke beneath it. Then it broke beneath that trend line, and then it got to the support line, which was once resistance, which is where the gap kind of started at. And then it came back down on March 14th, touched it, went back up. It broke beneath that. And then you see right here, recently, it's staying beneath that resistance line. Well, now it's a resistance line, but that one support, now it's resistance, and it's staying below it. And you can see right here, recently, it could not break above it. So if it does reject, I can see the rest of that gap filling. But another thing is right here on April 23rd, there's another gap down. And as we are seeing now, gaps are filling. So I'm comfortable buying it as it's down in the 150s, 140s. I'm hoping it doesn't test the lows again of the 110s, for example. Um, but if it does, I will be loading up super heavy if it ever hits 110 again. But 140s, 150s, I'm buying steadily, increasing my position, so that way once the market turns around fully, I'm in a position to skyrocket in a sense. And we can see here it says the subtle strategy Elon Musk for Elon Musk's price cuts at Tesla, right? And I didn't position my camera in the best position, but it says right here, and I'm gonna move the camera over just a little bit, just so I can read it to you all. And it says Tesla Inc.'s rising string of price cuts represents a crucial chapter in the company's near 20-year story. And it says the price cuts this year sent conflicting signals about customer demand for the company's cars, which have generated fat profits in recent years after a more of a decade heartache as Musk forged a new path for auto business. So a lot of people saying that, hey man, you're cutting your prices, but that was where the revenue was coming. You were charging a lot of money, you were selling a decent amount of cars, and revenue was coming in. But now you're slashing the prices, and you're not selling. I mean, you're still selling the same amount of cars in a sense, but now we're not making enough revenue. So now they're a little panicky, a little shaky. But then last week, Mr. Musk articulated his strategy behind his moves. This man's kind of a genius almost. He declared Tesla would give priority to continued sales growth at the expense of near-term profitability. So he said, y'all are looking short-term, but I'm looking for the distance. We're looking to, it's not a race, it's a marathon. And the marathon continues. Rest in peace, Nipsey Hussle. Go ahead and like, subscribe, everybody. He says right here, Mr. Musk maintains he's making a 21st century gamble that he can, over time, profit from the future software subscription style revenue from Tesla owners, including for autonomous driving capabilities. Then he goes and says, we do believe we're laying the groundwork here, and that is better to ship a large number of cars at a lower margin and subsequently harvest that margin in the future as we perfect autonomy. So like you said, he's trying to do a subscription base for the software in the car. And so he's like, what he's about to say right here, his argument is akin to Apple Inc.'s iPhone and the App Store sales. The bigger the fleet of vehicles sold today, the more potential for a higher margin of software profits in the future. So he's saying, yes, we're making money off of cars. Cool. But that's not our only source of revenue. We want our main source to be the subscription style service for our vehicles. So we can take a little cut on profits right now. In the future, profits are going to be rolling in because more people have the vehicle and more people are going to need that service for the his subscription service for the vehicle and the driving autonomy. So we risk a little profits right now, but we gain them in the future. And then Musk wants the car to be so affordable that everybody can afford the car. He's not trying to make it some luxury car where only the rich can have. He's trying to make the prices affordable so the everyday investor can have it. And then once the everyday investor and everyday person can afford that car and they're seeing them more on the road, and then that subscription service hits, Tesla's going to be rolling in the dough. And I'm going to be loaded up fully. I'm going to be ready. So that's Tesla. Look, ultimately, Tesla has already suggested it could cost nearly $150 billion to reach its goal of 20 million cars produced annually in 2030. So if you're selling 20 million cars annually, and then you have a subscription service on top of that, come on now, y'all. We can drop down a little bit right now so we can grow overall. I believe Kathy Wood says her price prediction for Tesla is like 2,000 a share. That's something right there. I didn't say it. She did. I'm just relaying the message. But that's my take on Tesla right now. Definitely loading up on that. Next stock, we have Amazon. We all know and love Amazon. Let me get this off of that. Amazon is something that most of us use on the regular, whether it's shopping, Amazon Prime for the TV, their web service, Whole Foods. Amazon has their foot in so many sectors. That's kind of hard not to use Amazon. They're still a growing company on the regular, right? So let's take a look right here. You see there's been a long-term downtrending since August 2022. That's that purple trend line has been descending. Touches again in February, and then it finally crosses above it April 14th, 2023. It crossed above that negative down declining trend line. And then you can see since November 2022, it's been on a upswing. This is a slow one, real small. And it's been staying in that trading range ever since November roughly. The low being $82 and the high being $113. So if you were trying to swing trade it, once it goes up to this resistance line, you would sell it, and then once it comes back down to the support line, you would buy it. But it's really been staying closer to the support line than the resistance line. So all of this has kind of been like minor little buying opportunities, roughly around the $96 range, and the $99 to $96 is where I have been buying at personally. Waiting for the market to turn around once inflation goes down and things aren't so expensive. I can see Amazon being in a position to take high flight because things are expensive. They're trying to crush the consumer so that way they can reverse the interest rates, but the consumers are still showing strong. They're still buying stuff like it's nothing happening. So it's slowly coming down, but it's not coming down fast enough. But once it's down and they actually start cutting interest rates, I can see Amazon starting to flow. You can see here that on the RSI, it's in the 50s, so it's not overbought, not oversold, a little above neutral. You can see the MACD. They're staying kind of close together. It is kind of positive. So this stock could probably run up to, not too far really, maybe 110 in the short term. As you can see, I didn't circle it, but there is a little gap right here. Gap up and then an instant gap down. So that will get filled. Actually, it gap starting at 104 to 109, and you can see right now the price of it is 105, so it's already starting to fill in that gap a little bit. So I wouldn't be surprised with this one if it goes to 109 in the short term, if it doesn't reverse. If it does reverse, I'm looking for it to hit this support line or come close to it, and if it does, I will buy a little bit more heavily because it tends to bounce off of support. As you've seen clearly right here on March 13th, I'm sorry, it touches support, it goes underneath it a little bit, that's that wick below it, and then it comes right back up, and it closes above it, and then kind of ran up a little bit from $90 to being steady at $100. So a little bit more than 10% of a run right there, and no more than, what is that? The 13th, no more than like 4 or 5 days, it ran up like 10%, and it kind of stood there. Um, and then it dropped back down. What is this? 95, and then it ran back up to 104. You feel me? Like another 10% run in a sense. So it's taking 2 steps forward, take a step and a half back, 2 steps forward, step and a half back. And really, I could probably draw another trend line starting right here and putting it to here, at $98, and you probably touch right here, because it's more. You can see this trend, even though you see where it's at right now, it's starting to speed up a little bit. That's why it's not touching the actual support line right now, because it's starting to speed up. So another trend line could be drawn, and it'll probably touch that about 2, maybe 3 times. And then, if it drops below that support line, you will still have this support line that I have drawn right here that it could touch. So that's the technical analysis for Amazon. Let's look and see what it's saying. And it says Amazon results surprised with higher revenue and FCF, making Amazon stock popular again. And I think that's the free cash flow, the FCF, I believe. And then it says Amazon reported excellent Q1 results on April 27th with higher revenue and free cash flow. This has made Amazon stock popular again with value investors. For value investors, that means that the stock is below where it should be. The stock might be worth $150, but it's only at $100 right now. And it's a good company, not going anywhere. So it's going to come right back up to where it's supposed to be at. So you're getting a value on it. But not only is this a value stock, this is still a growth stock. You feel me? And for those of y'all who don't know, I got the Jaguars on. Go Jaguars. We did do pretty good in the draft so far. But continuing with this, though, it says as a result, investors can find good deals with covered calls and out-of-the-money cash secured puts. Amazon said its revenue for the quarter was 9% higher compared to last year, and its 12-month free cash flow improved significantly. In the latter case, the LTM and the FCF went from being negative of an outflow of $18.6 billion to just a negative of $3.3 billion. This implies that sometime in the last year, Amazon free cash flow has turned positive. Very good. As a result, it's likely that Amazon will likely report positive free cash flow in the next quarter, unless the U.S. enters a major recession. If we get into a major recession, those support lines, that I've been drawn, they're probably easily going to get blown through. Easily. And the stock might be free falling for a little bit, and we have to wait to see where it's going to stop at, and then we'll adjust our plan from there. Right? Free cash flow is important because it is what is left over after paying all cash expenses, including capex and the working capital charges, which are not included in the earnings numbers. It shows the company is throwing off cash that can be used to buy back shares, make acquisitions, reduce debt, pay dividends, or just accumulate on the balance sheet, right? So them becoming positive in the free cash flow gives an opportunity to do so much within the company. If Amazon starts buying shares back, the stock will rise, right? People like seeing that the company is buying more shares because that means they believe in themselves, right? Making acquisitions. Remember, they bought Whole Foods. It didn't go quite like they wanted it to, but they can buy another company that's doing great and make money off of that. Reducing debt is always good. We all want dividends paid. Maybe not right now because we want them to keep investing into themselves and growing even more, making us more money. But let's say they're at a point where they're just comfortable and like, you know what, we're gonna pay our investors. Cool, we'll make a little bit of money. We're cool with that. The last stock I want to talk about is Nvidia. Let's look at this. Nvidia has been high flying, ripping it pretty much since October 2022. And you can see that blue line is the trend line. It's been blowing through it. It hasn't been blowing through the trend line, but you can see it hasn't been above it. I have right here this yellow line. I'm calling this one of the support lines because when was it? December 13th. It couldn't get above it, right? You see it dipped, came back, and then went back down, and then that once resistance line became support. It bounced off of that, and ever since it bounced off of that, it's been running, right? Boom. You see this little gap right here? All gaps gonna fill. Not guaranteed, but it's kind of like an unspoken rule. So you can see recently this is a resistance line right here at, was it 280? So you can see the MACD crossed down. It's headed downwards in a downwards trend. RSI, it went from being overbought right here to going more towards a neutral sign. It's still kind of more overbought than neutral. It's closer to there, but it's still in the neutral zone. It's still in the good zone right now. So if it does reverse, I could definitely see it coming back down to like 205 roughly to fill that gap. You can see this is like another support slash resistance line right here. So first I can see it coming to $224 first. That will fill maybe not even half of the gap, but it will fill some of it. And if it drops below that, then my next one will be 205 roughly. And then if it breaks that, it'll be 187. So there's little layers. But if it breaks 224 and drops to 205, I'll start nibbling. I'll buy maybe a share or two. It goes to 200, I might buy another share. It drops to 187, I might buy a few more. But if it breaks below 187, then I'm not touching it. I'm gonna let it fall. That's the case like if a recession happens. I'm gonna let it fall. Once it starts to find another bottom, I'm not trying to catch the bottom at all. I'm gonna wait till it hits the bottom and kind of establish that was the bottom. And then if it accumulates, then I'll start making my plans from there, right? And then you can see up here, you can draw another, like a little box right here. Let me see if it's gonna let me do it. Regression trend. Where's the shapes at? No. Okay. Rectangle. Boom. Oops. Boom. So, get out of here. So you see this little rectangle right here, right? That's a consolidation zone, right? If it breaks above that little rectangle, it can run up. There's no resistance line above that right now. In the short term, it could run for a little bit. If it drops below it, then at that point I'm looking at 221, 224 as the next buying zone. You feel me? So take a look. I mean, I don't know if you're doing your own technical analysis, but I'd say put this little rectangle on there because it's trading. You see, it's just fluctuating. It's consolidating. Goes down, goes up, down, up, down, up, down, up, but it hasn't broken that rectangle. It hasn't broken that box yet of consolidation. And let's look at what they're saying. NVIDIA's new guardrails tools fixes the biggest problem with AI chatbots. The biggest thing in the internet right now, AI chatbots. NVIDIA is introducing a new NeMo Guardian Rail tools for AI developers, and it promises to make AI chatbots like ChatGPT just a little less insane. The open source software is available to developers now, and it focuses on 3 areas to make AI chatbots more useful and unsettling. Let's keep going down. And then it gives you an example right here. I believe one of them said that they need to exterminate humanity in order to save humanity. It's on some iRobot stuff right now. The biggest threat to the Earth is mankind. But NVIDIA says that NeMo guardrails are focused on topical safety and security boundaries. The topical focus seems to be the most useful, as it forces the LLM to stay in a particular range of responses. NVIDIA demoed guardrails by showing a chatbot trained by the company's HR database. When asked questions about NVIDIA's finances, it gave a canned response that was programmed with NeMo guardrails. So, the safety and security tenets focus on filtering out unwanted responses and preventing it from being toyed with by users. As we've already seen, you can jailbreak ChatGPT and other AI chatbots. The NeMo guardrails would take those queries and block them from ever reaching it. So it's kind of like trying to make it a little bit more safer, a little bit more efficient for the users, which is overall good. And I also read another article about NVIDIA that says that the chips used for the AI chatbots are almost impossible to buy. It's so little of them. They're kind of rare. And when something is rare like that in scarcity, you can raise the price, charge an arm and a leg. And that's probably why NVIDIA's been running. I know they've been doing a lot of things with a lot of sectors. You need the chips for the AI. You need the chips for the virtual reality. Chips for the gaming. They're a highly needed company. So I've been chilling on it right now because it has been running a lot faster than I expected it in my mind. When I bought it, it took off like quick too. So I've been letting it run up. Once it gets to my buying ranges, like I just explained, I will be buying it again. But let me know what stocks are you looking at in the future. But I appreciate y'all for rocking with me so far. Make sure y'all like and subscribe. Share my video. I'm trying to get to 100 subscribers. If you know somebody who's wanting to get into stocks, send them my way. I do my best to talk with them, try to encourage them. But another thing is, I noticed that in the, not so much phase 1, but in the COVID times, a lot of people were talking about, they're trading, they're investing now, they want to make money. But now that COVID is pretty much over, a lot of them went from investing money and trading money to gambling, to sports gambling. And then that right there showed me that y'all aren't trying to grow your money over time. You're trying to get rich quick. And you keep trying to get rich quick, you're going to mess up and you're going to end up losing a lot of money. I think that's what happened when people in the stock market. They seen that, they made a little bit of money in COVID time, and then things started to turn around because in COVID everything was running up quickly too. But that's not normal. Stocks don't go just straight up. They go up, down, up, down, up, down. And they weren't trying to learn, study, get any like techniques or anything like that. But they were just trying to make money. And since that wasn't working anymore, now they went to sports gambling because better odds, I guess, in their favor. But whatever you're gonna do, stick to the course. Consistency is gonna show. Is gonna be your best friend. That's where you're gonna get your results from. Staying consistent. But I appreciate y'all for rocking with me.